If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Ladies and gentlemen, it is 11:11 on Wednesday. Welcome back to the Cream live stream. We have a very special guest today, somebody who it is impossible to not smile around this man's energy, Mr. Jay Conner, who is an expert at raising private money. We are huge fans of Jay personally, but we are also huge fans of really raising private money. We have built our entire career off private money. RJ and I, we just did a post today, Jay, and we'll get into this stuff after our little brief intro here, but we're paying off over $1 million worth of debt this week. There's a lot more. We build, and that doesn't even count the profits, right? Obviously, we're paying back private lenders. There's something in there for us, but everything that we have built, RJ and I, has been built on the backs of our private lenders. It's not even built on the backs of them. It's hand in hand, running this race together as partners. These are financial partners. And Jay's going to teach us today what has worked for him at attracting these financial private lenders, these capital partners. And we're going to be talking about the markets a little bit, how to utilize private money today to its full extent. RJ, how's the vibe?
The vibe is alive, and I want to make sure everybody is paying attention. So get out a pen, piece of paper, because Jay is going to school us on all of the things that private money. Jay's the OG when it comes to this. We've learned a lot from Jay.
Absolutely.
From doing this for many, many years, but this guy's been doing it for way over a decade. And the last time that we actually saw Jay was at one of the masterminds that we're a part of. And he's a natural. He's an extraordinary piano player, by the way. So if you get a chance to see Jay in action, listen to the tunes that he's putting out there, because he's a master at that. But today is about private money, and I'm ready to get into it. Jay, what do you got for us, man?
Jay, hang on one second. I gotta tee this thing off here for Jay. So Jay, the number one thing we get from our students and from everybody, the market, right? People tell us all the time, it's like, how do I raise private money? There's this inner fear. And I think a lot of it has to do with like maybe a self-confidence thing. And maybe it's kind of like a self-worth thing, actually. Like people have this fear of like asking other people for money because they're looking at it from the standpoint of like they're asking to get something. You have positioned this in such a way where it's like, how do we ask for money without talking about the money or asking for the money? How do we create this like energy of like partnership? It's not like you're begging somebody for money. How do you approach people where it's like a partnership, and how does this all work?
My lands, Dave, RJ, thank you so much for inviting me to come along and talk about private money, my most favorite passionate subject, because private money's had more of a bigger impact on mine and Carol Joy's investing business than any other strategy. My lands, with that intro, you just like triggered my brain to go down so many important, critical pieces of information here for people to understand. You know, one thing you just said, Dave and RJ, was, you know, you hear all the time, how do I start raising private capital? And I can tell you the answer. If you've never raised private money before, here's how you start. You start by owning the real estate between your ears. Now, what do I mean by that? What do I mean by that? What I mean by that is, you know, everything moves from the inside out.
Yes, it does.
And what I mean by that is if you're not exuding confidence, trust, credibility, reliability, knowing what you're talking about, who in the world is going to invest in your deals and loan you money if you're not actually feeling that yourself? So the question is, how in the world do you get that feeling? How do you come across that way? Well, first of all, you come across that way by owning the real estate between your ears, the mindset. And here's the mindset that is critically important. You see, when I was borrowing money from the banks and institutional money from 2003 to 2009, Think how far back that was. All I knew to do was go to the local bank, get on my hands and knees, put my hands underneath my chin, and say to the banker, "Please fund my deal."
Yeah,
Please
begging
fund
like
my
a pauper,
deal.
like
Right.
a poor poverty wanting person. That's a low vibration, bro.
And that's all I knew to do. I mean, I'd read books. I mean, I never even heard of hard money lenders back then. For goodness sakes, I never heard of private money. That's all I knew to do was to go to the local bank, pull up my skirt so the banker can see my personal assets, my financial statements, give me a colonoscopy, pull my credit score. That's all I need to do. So here's where the mind shift comes. When I was cut off from the banks, and that's a story in and of itself as to how to push through and have resilience. When I was cut off from the banks back in 2009, January 2009 to be specific, I hung up the phone when I got that news, and I sat here and I asked myself a critically important question. The power is in the questions. And the question I asked myself was, Jay, who do you know that can help you with your problem? When I was cut off from the banks. And, these people running around saying, oh, every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem. Let's face reality. I didn't have a way to fund my deal. So I called up my good friend. I had that answer in my brain immediately when I said, who do I know that can help me with my problem? I called up Jeff Blankenship, my good friend in Greensboro, and he's the guy that introduced me to private money, private lending, and what that was all about. So when I learned about it, the first thing I did was get my mindset straight. So let's dig into this right now. One thing I hear all the time is, and you mentioned it, Dave, from new capital raisers, they'll say, I've got this fear of rejection, right? Fear of rejection. Here's a writer downer. Ask yourself this question. How can you have a fear of rejection when you're not asking anybody for anything? You see, the way the mindset works to be a successful capital raiser is what I did. And here's what I did. And here's what I do. We separate. How do you get deals funded without asking for money? Here's the answer. You separate the conversations between first putting on your teacher hat, which says private money teacher, and leading with a servant's heart and exposing people, first of all, in your warm market, people you have connections with, to what this world is even about. You see, I got 47 private lenders right now funding our deals. You know what's interesting, Dave and RJ? What's interesting is not one of these 47 private lenders that are funding our deals ever heard of private money until I put on my teacher hat and I exposed them to it, right? And so none of them ever heard of self-directed IRAs and how people can use their current retirement funds and lend to us real estate investors and get returns either tax-free or tax-deferred. So I don't know anything about that. I had to study it. So how do I get my deals funded without asking for money? Here it is. Separate the conversations between teaching your opportunity and having a deal to fund. So let's play that out. So after getting my mindset right, that I wasn't going to beg, chase, persuade anybody, I'm going to lead with a servant's heart and expose and share people to this world, right? How did I do that? Private lender luncheons, one-on-one, Starbucks coffee. My very first private lender came from church, where Carol Joy and I go to church on a Wednesday night after Bible study. There's a story there with scripting as to how I got $500,000 within 24 hours of just exposing this opportunity. So back to separating the conversations. Here's a writer downer. Desperation has got a smell to it.
Damn right.
And what I mean by that is, if you are talking about your opportunity for people to be a private lender and you're talking about a deal, in that same initial conversation, you already sound desperate, for goodness sakes, without even trying to.
Yeah.
Like, you're talking about a deal. I mean, you're pitching a deal and you're not even trying to pitch a deal. And by the way, I've never pitched a deal ever since 2009. So let's unpack this. So put on your teacher hat, know your program. There's a writer downer right there. You can't, the question is, what are you going to teach, for goodness sakes? What are you going to teach? What are you going to expose? Well, you're going to expose, share, teach what it is you offer. Why do people want to invest with you? So you want to determine, and I say just duplicate my program. It seems to work pretty good since 2009, right? So just duplicate my program. Decide on your interest rate that you're going to teach. Well, I've been paying 8%, no points, no origination fees, no extension fees since 2009.
Mm-hmm.
Same deal, same thing. I don't care if the local certificate of deposit is 0.17% or it's 3.25% right it is right now, or if it's 5% like it was a year ago, 8% across the board. So know your program that you're going to teach. What's the interest rate? How can they get their money back in case of an emergency prior to the note coming due? What's the maximum loan to value as compared to the after repaired value? What's the frequency of payments, et cetera, et cetera, et cetera. So we know what we're going to teach. And have a relationship. Here's a write or down or actionable item. Have a relationship with a self-directed IRA representative.
Mm-hmm.
So that when you're talking with someone in your warm market, your connections, and you learn that they've got retirement funds that they're not happy with, then you immediately are able to do a 3-way call introduction or a 3-way group text or whatever, and introduce them to your representative at the self-directed IRA company so they can move money over. So let's just do a little role play here for a second.
All
Dave.
right.
Let's just say, Dave, that you are a new private lender with me.
Okay.
Let's say hypothetically, let's say we go to church together, right?
All right.
And I met you for coffee.
Sounds good.
We were having coffee at Starbucks or whatever. And let's say I started out the conversation with, and I love conversation starters. I love conversation starters, not starters, but bringing up the topic of private money.
Mm-hmm.
And one way I may have brought up this topic to you, Dave, while we were having coffees, I might have said, by the way, Dave, did you know there's a way people can earn unlimited money per year tax-free? And of course, you're not going to know the answer to that question. And then I may say, well, have you ever heard of self-directed IRAs and how people can use retirement funds to get unlimited money per year tax-free? And you never. So that led to a little conversation about retirement funds and how that works. And I learned in that conversation while I was drinking coffee with you that you've got retirement funds. Maybe it's a previous 401k. You're not happy with it. And let's say you got $150,000 and that's what you want to start with. So you've told me you want to start with $150,000. I introduced you to my self-directed IRA representative. You're all excited. You love the program. You know what your rate of return is going to be, but there's no deal attached to this. You see, that's part of the secret sauce. No deal attached. So you've now moved your money over, your $150,000 of retirement funds that you're not happy with. Maybe it's in the stock market, volatile, et cetera. You moved it over, took a couple of weeks to get your money moved over. And now you've told me, Jay, my account's funded. I'm ready for a deal. And I told you initially, I'm going to say, Dave, I'm going to put your money to work for you just as soon as possible when your account is funded. Now your account is funded at the self-directed IRA company. I'm going to share with you guys and your audience right here, right now, in front of God and everybody. I'm going to share with you right now the exact script that I'm going to call you up, Dave, my new private lender. I'm going to call you up. Here's the exact script that I'm going to say to you to get my deal funded without asking you for any money. Bear in mind, up to this point in time, I haven't asked you for any money at all. All I've done is put on my teacher hat, shared the program with you. You love it. And I've held your hand, and here you are going. By the way, this program is just not for people using retirement funds. I mean, it could have been Dave's just investment capital sitting around in a money market earning nothing. So here we go. Here's the script. I told Dave that I'd put your money to work just as soon as possible. Let's say a week or two's gone by. Don't wait long because they're getting antsy. So I call up Dave. Of course, I know you guys, it's hard to believe we actually still have handsets and cords here in North Carolina in Morehead City, handsets attached to telephones. Anyway, so I call up Dave. Dave answers the phone. We have a little chit chat. Here's the script. Dave, this is called the good news phone call. Dave, I've got great news for you.
Okay.
I can now put your money to work.
Okay, I'm listening.
I got a house in Newport with an after repaired value of $200,000. I've got it under contract. The funding required for the deal is $150,000, and that matches up to what you've got. And of course, that's the criteria of the program. I'm not going to borrow more than 75% of the after repaired value. So I got the house under contract, after repaired value $200,000. The funding required for the deal is $150,000. Closing is going to be next Thursday. So I'll need for you to have your funds wired to my real estate attorney's trust account by next Wednesday, a week from today. And I'm going to have my real estate attorney email you the wiring instructions. End of conversation.
Done.
That's the end of the conversation. The most stupid thing, listen, folks, listen. The most stupid thing I could have done is ask Dave, do you want to fund the deal? Of course, Dave wants to fund the deal.
Yeah.
He loves the program. For goodness sakes, he's moved his $150,000 from wherever he had those retirement funds over to the self-directed IRA company that I recommended. His account is funded. For goodness sakes, he's not earning any money until I put his money to work, and I'm morally, ethically obligated to put his money to work and invest his money because he moved his money at my recommendation and advice, and he's not earning any money until I fulfill and deliver on my promise of putting his money to work. And now Dave is ecstatic that I've given him the good news phone call, and here we go. So
let me give you a little unpacking here, and because RJ's got a quote. RJ's been saying this for years, Jay. He says, "He who educates the market dominates the market."
Oh, my
RJ's
man,
been
can I steal that?
Take it. Run with that. That is an RJ Pepino original right there.
I want to put that as a banner at my live events at the Private Money Conference. He who, let me make sure, I'm going to give you credit. I'm going to put, so he who educates,
give it to him.
What is it? He who educates
the market dominates.
Hallelujah.
The market. Hallelujah. That is right. So here's the thing. You know what I got from you? That's what we're all about. That you got to teach them. It's because that removes the stink. That's what I wrote down. Desperation has a stink. It's got a smell to it. It's more than a smell. It's a stink. It's an odor to it, right? But when you are coming across as a teacher, you are putting out. Let me ask you this question, Jay, because what you said, you got to, you know, what it's about, the real estate between your ears. It's about exuding confidence, trust, reliability. When I hear exuding, I hear putting out. Now, let me ask you this, Jay. Have you ever heard this quote before? You reap what you sow.
I think the Apostle Paul said that one time. Yes.
Let me tell you something. This is spiritual knowledge. I know you approach it like a sermon, and that's something I love about you. Here's the thing. You reap what you sow. A low vibration. A lot of people out there, Jay, they're so focused on what they are reaping that it puts that stink. It puts them in that stink of desperation because they're so focused on what they're reaping. And then the ego kicks in and it's like, well, I don't have enough. And now you're stinking like desperation when you're focused on what you're reaping. But there's an even lower vibration than focusing on what you're reaping. You know what the lower vibration is,
What's
Jay?
that?
Focusing on what other people are reaping. That's as low as it gets. When you're looking outside of yourself and you're looking at so-and-so keeping up with the Joneses, look what they're reaping. You are at the lowest vibration, the most desperation stink you possibly can be when you are focused on not only what you're reaping, but what other people are reaping. If we can flip the script on this, become a teacher, now you are exuding knowledge, you are exuding value, you are exuding confidence, you are educating the market. That is what we're talking about here. Focus on what you are sowing and let what you reap take care of itself. Hallelujah.
Our good friend Matt Andrews, I've heard him say it all the time. He was a keynote speaker at my mastermind not too long ago. And the mantra that he kept saying over and over and over again was, quote unquote, it's all about sowing. He kept saying it all the time. It's all about sowing because you ain't got to worry about the reaping, right? And how in the world can you reap before you sow? right? And it's all about serving. Here's another one. It's all, I mean, you guys got me thinking now. It's all about sowing with no strings attached whatsoever.
Yep.
Yes. No
No
expectations.
expectation.
It's unconditional
Yes.
service. Unconditional love. There's no conditions
It's
to
like,
it.
I was talking to some good friends a little while back, and they were in this relationship, husband and wife, and they were complaining. About, I don't get any appreciation. He never says, or she never says he appreciates me or whatever.
Well, not to cut you off, but what is she focused on? She's focused on, I'm not getting enough.
Exactly.
I'm not getting enough.
And it's
I'm
like,
not
my
getting enough.
advice was when you don't, and this comes right here to our topic of private money and sowing, when you don't expect anything in return, how can you ever be disappointed? I mean, everything's about, and of course, I'm expecting for people to do business with me because I know over time, the majority of them, I mean, here's the deal. If someone is interested in getting high rates of return safely and securely, and they come listen to my presentation, or I put on a luncheon and they hear my presentation, or I'm just visiting with somebody one-on-one, I'm telling you, if they've got retirement funds, they're doing business with me, period. Because the question is, where else are they going to get these safe, reliable funds? Now, can they invest in somebody's fund out there? Which, by the way, my investors don't invest in a fund. Everything's a one-off. They're investing in a single family house. So they got their own promissory note. They got their own deed of trust.
Amen.
So they're not investing in the fund. Now, are there people out there offering stuff at 12 to 15% return and investing in a fund? Sure they are. But let me just tell you a little something and a little secret. That's what the pro forma said. And there ain't never a pro forma that's right. So in this deal with single family houses, then they know it's just like they're putting their money, the private lenders are just putting their money in a CD at the local bank. The private lender is the bank. They know exactly what that rate of return is going to be. And and so let's come back to mindset for a second. Y'all got me all cranked up now.
We're all fired up over here. I'm highly
caffeinated. We're ready to go.
So, back to mindset. One question that I hear all the time, and it's a very valid question. From a new real estate investor, maybe hasn't done a deal yet, maybe he's only done a couple of deals. And the question is from that real estate investor to me is, quote unquote, Jay, who in the world is going to give me money and I've never done a deal before? Now let's unpack that question for a moment. First of all, they ain't giving you any money. If somebody gives you money, that's a gift.
Yeah.
If somebody gives you money, that's a gift, as if you don't have to pay it back, right? And in fact, I really prefer, after people understand where I'm coming from, I really prefer to call my private lenders investors, because private lender, and they're private lenders, right? And I call them private lenders, but I segue into, after they understand, I segue into calling them investors, because the term private lender focuses its benefit on me, the borrower. Investor focus, even though they're not getting in any equity position, they're not getting, they don't have any ownership, but they are. I mean, here, at the end of the day, here's the deal. They're not loaning you money on your deals, even though they are. They're not investing in your deals, even though they are. Let's talk about the lender's mindset. They're investing in you. You. Yes, you're collateralizing the note. Yes, you're taking care of them. You're giving them the protection they need. But their mindset, they are investing in you. So back to that mindset. It's all about focusing on their benefits. What are they looking for?
Yeah.
Right?
Yield.
Where are they coming from? They want yield, and they want to be able to sleep at night and not worry about losing their money. Yeah.
security.
There's only one reason. There's only one reason that someone is not going to loan you money or invest in your deals.
They
They don't
believe in
believe
you.
they're going to get paid back
Yep. That's
for
exactly.
whatever reason. That's the only, their level of trust, their level of belief. That's the only reason. Right. And so in my program that I want you to duplicate, if you're listening to this show, in my program, there's all kinds of layers of protection that protects the private lender. And, back to mindset, I tell my new private lenders, investors, I tell them, I said, part of the program is, and listen to this languaging, I do not allow my investors, you hear that? I do not allow my investors to invest more than 75% of the after repaired value.
Never.
Because I want to protect them.
Yep.
Right.
100%.
And when you use that word allow, that necessarily
word.
infers you're in control and you're looking after your people.
Because you are. Yeah.
And because you are.
Yeah.
Because you are. Yeah. I ran aground. Back to you guys.
Well, RJ, what do you got
So
here?
I just wrote down, there's so much good things in this last, 20 minutes of us talking. So please, if you're watching this after the fact, definitely rewind and listen to Jay's script. Very generous for us to share that. And thank you for sharing that, Jay. But he's keeping it super simple. He's making sure that they're protected. And you can get all of this. We got to get, how can if people want to work with you and your system, Jay, what is the best way for them to get a hold of you? How can we? Yeah.
Yeah, I'm sorry. Go ahead.
How can they connect with you, Jay?
Yeah. The best way to learn this, and one thing that I've been told, I believe God has given me the ability and the gift to take what may appear to be a complicated subject and make it super simple, right?
Mm-hmm.
As our good friend Tom Kroll says, easy peasy lemon squeezy. So what I've done is I've taken my process and I've boiled it down very simply, step by step, in a book. And the book is called Where to Get the Money Now. The subtitle is How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. And the book is $20 at Amazon, but for goodness sakes, don't give Amazon your money. Don't spend $20 with them. May I, Dave and RJ, may I give this book for free to your audience if they'll just cover a couple of dollars for shipping for free.
Amen. Yep.
And I will 3-day express this to you by the United States Postal Service. By the way, believe it or not, the Postal Service is still in business. So I'll actually mail this to you. This is not an ebook, actual book, bestseller. I'll autograph it for you and I'll ship it to you 3-day express. And in the book, you got my contact information. I'm very easy to get up with. It's really a novel thing we do here. When somebody calls my phone, we actually answer the phone, if you can believe that. But anyway, hey, by the way, let's put my phone number in the show notes for people to, if they just want to pick up the phone and call, I'd love to talk to anybody about this subject on private money. 252, and by the way, I'm in Eastern time. 252-808-2927, 252-808-2927. And then one more way to connect with me is I'm now in my eighth year of my podcast. And my podcast is called Raising Private Money. Imagine that. Raising Private Money with Jay Conner. You go to any of your favorite platforms, just search for Raising Private Money. And what we do there, I have 2 shows a week. They come out early Monday morning and Thursday mornings on Raising Private Money with Jay Conner podcast. I'm interviewing people twice a week as to how they, very successful real estate investors, how they have gone about raising private money, because we all can learn from each other. We all have our own little nuances. And so I interview capital raisers for multifamily, large apartment complexes. I interview private real estate operators that raise money for self-storage. Yesterday, I interviewed a guy that raises private money for land. Of course, I interview other people that raise private money for single-family houses, etc. So if you're looking for money for your deals, in addition to my book, come on over and join me on my podcast at Raising Private Money.
How did they get your book again, Jay? Is there a website?
Oh, I'm sorry. That would be helpful,
Yeah.
for goodness sakes. Here's how you get the book. I got so excited, I forgot to even give you the URL. So here's the URL on how to get the book for free. Just cover a couple of bucks in shipping. www.jconnor.com/book. And I'm an ER, by the way, not an OR. Most people spell Connor with an OR. So it's JAYCONNER.com/book. That's Connor, JAYCONNER.com/book. And I'll rush it right out to you.
There it is.
We got it on the screen here. We got www.jconnor.com/book. I know I'm getting mine.
Sir.
And I want to bring it back here for a minute. We are getting into the real deal. And so Jay's a deep guy, and we consider ourselves pretty deep as well. And, you said something, a very powerful word, and I cannot make this up, right? You said the word allow, right? And here's the thing. This is my journal right here in front of me. It's right here in front of me. Look at the date. Can you read the date on there? It says 1/29/25 here, right? This is me today. Something I wrote down today was I allow massive success and abundance in my life. I allow. That's a major thing here, Jay. So there's two things that we covered that's extremely powerful, extremely deep. It's taken me years to actually realize this. Number one is focus on what we are sowing and not what we are reaping. This is a powerful, powerful thing, right? Focus on what we are putting out. What are you exuding? Are you exuding a vibration of neediness, like I don't have enough, so I need more and I'm desperate? And do you have that stink? Or are you exuding value? How can I add value to this person? How can I teach this person? How can I educate this person, right? You're focusing on what you are sowing, right? The next thing is allowing. Here's the thing. Once you figure out the first part, which is what I'm putting out, the way to allow, the way to receive, that is also an internal game. We talked about how focusing on what we sow, that's an internal game between the ears, right? What we allow into our life, you're going to like this, Jay. That's the heart, right? And we allow through the heart, and that's the way you feel about yourself. That's those limiting beliefs. So you could look at yourself in the mirror in your head, and you can say, I'm successful, I'm successful, I'm successful. But if you don't feel successful, if you don't feel the feelings of blessings, if you don't look around and truly feel grateful for what you have right now, it is going to be impossible to receive, right? We cannot receive until we are grateful for what we currently have. Truly feel grateful. We have to feel grateful and feel blessed now. And that is how the blessings flow to us.
Man, Dave, I love it. I love it. Shoot, I mean, you guys, we got the same core value. We got the same.
Amen.
We got the same filter and pair of glasses as to how we see this world. It's
the way it is, bro.
It's such a joy.
True.
The joy is all mine to be here with you all on your show today. It really is.
Well, we are wrapping this thing up here, and we've covered quite a bit. And RJ, what else do you got here from Mr. Jay Connor? We got his book. I'm getting on the book, www.jconnor.com/book. RJ, what do you got here?
Guys,
Bring us
we
on
have
home.
a little bit of time. We got to be respectful for Jay because he's raising a bunch of capital, doing deals down in North Carolina. If you guys have any questions about what he just covered, put them in somewhere in the stream. I'll take a quick peek. We've got some.
I got a question for you, Jay. We got a question from the listeners here. Why do you do one-off lending deals and not do a fund or a syndication?
Sure. So that's a great question. The way I look at it is I'm going to do a fund if I'm raising large amounts of money for, say, multifamily, a larger project. So here's the deal. If I raise a bunch of money for a fund, then I don't know if I'm going to have all of it put to work all the time, or if I'm not going to have enough. So I don't want to be paying interest on borrowed money that I'm not using. Right?
Amen.
So, and I don't want to come up short. So right now I've got about $1 million, what I call sitting on the sidelines that is pledged from my private lenders, waiting for me to put that money to work. So I'm using it and turning it all the time, right? By the way, when I have a new private lender that comes on board with me, which by the way, I'm not accepting any more private lenders because I've got just the right amount right now. My mastermind,
he's got a waiting list here. He's got a waiting
I
list.
do. I got a waiting list.
Oh yeah.
But
Yes.
but however, I do match up some of my private lenders with my mastermind members, which is my elite group, and I'll help them fund deals as well. But anyway, back to answering that fun question. So I got money sitting over here waiting. Actually, that money's from 3 private lenders that I have recently paid off. And those 3 private lenders are totaling about $1 million. I've recently paid them off, and they're biting at the bit. They're not making any money until I put their money back to work. But the interest that I'm paying on these other deals right now that are in process to my private lenders, my investors, I'm using that money, right? So by having a promissory note matched up to a private lender, we know exactly how much. I mean, I'm using that money for a deal, right? So that's the reason. And there's another reason. I want to protect my private lenders. When someone invests in a fund,
Correct.
your investment, your loan, your investment is not collateralized. It's not. I mean, your security is a piece of paper. That's called a private placement memorandum that was created by a SEC attorney,
and which is fully written to protect the money raiser, not the investor. It's fully written by the attorney of the syndicator or of the fund manager to protect them. And if something goes wrong with the fund, your money's tied up with 10 other people. Who gets paid back first? Well, I'll tell you who gets paid back first. It's the attorneys who get paid back. Whatever's left over then is divvied amongst all the other people who've invested in this fund. It is not collateralized. I want you to stress that, because this is the stuff that's real, that we see, and you've seen in your years in business. You've seen people kind of lose money with these funds because it is less collateralized or not collateralized at all. No one's talking about this, though. This ain't the shiny stuff. This ain't the fancy stuff, but this is the doggone truth.
Well, and you know what you just said, Dave, also triggered this to share with everybody. Back to that question of a new real estate investor, new capital raiser, who is going to, and we already talked about give, there is no giving of money, but who's on, so let's put it in the right framework. They will ask, who's going to loan me money or who's going to invest in my deals? And I've never done a deal before. Here's another answer to that question. Write it down, quote unquote. If you don't pay your investor, the property does. Which means if you don't pay them, they get the property. It's collateralized. Now, they don't want the property. They don't want to mess with it. That's why they invested in you. They just want to be totally passive. But what I just shared emphasizes the point that the note is collateralized and their legal recourse is to foreclose on that property, which, of course, for goodness sakes, they're not going to need to when you follow my program that's in this book of not borrowing more than 75% of the after repaired value. By the way, don't miss that little point. See, I got 20 reasons why I love private money. Why do I love private money the way I do it? Long list. One of those reasons is there's no limit to the amount of private money you can borrow. There's no limit to the number of private lenders you can have. You are your own underwriter. There's no applications. You are already approved. You are already approved because you're offering, not asking. But I want to make this point. Another reason I love private money is because in the world of single family houses, here's a writer downer. You always bring home a big check when you buy without taking any of your own money to the closing table. Now, my question is, who wants to get paid to buy houses? So,
ding, ding, ding.
Exactly. Now, the only way that works, I heard the ding, ding. The only way that works is if you are buying a property that is distressed and you're buying it at a deeply discounted price, which are most of my deals.
Amen.
I mean, if I got a $200,000 after repaired value house and it needs $30,000 or $40,000 in renovation or rehab, I'm buying that house between $80,000 and $100,000.
Yep.
All day long.
All day long.
all day long.
Off
So
market.
if I can borrow up to 75% of the after repaired value, so follow the cash, follow the money. If the after repaired value is $200,000 and I allow, there's that word, and I allow my private lender to loan me up to 75% of the after repaired value, well, I'm borrowing $150,000 when I purchase it or close. If I'm buying it for $100,000, I'm getting a $50,000 check when I buy that property. Well, how in the world does that work? Private lender wires $150,000 to the closing agent. $100,000 of that $150,000 loan goes to the seller. That leaves me with a $50,000 check, which I love the phrase on my real estate attorney's check, which is excess cash to close. And I love me some excess cash to close. So I'm bringing home a $50,000 check when I buy, took none of my own money to the closing table. But of course, that's less closing cost. So of course, I'm going to use the majority of that money for the renovation or the rehab. I'm going to use 30 or 40,000 of that for the rehab. And look, I can use it for carrying costs, marketing expenses. And a lot of times I will structure a deal to where I just let the interest accrue and I don't have to make those payments. So follow this cash flow. Buy a house, bring home a big check without taking any of your own money to the closing table, make no monthly payments, let the interest accrue, cash out your private lender when you cash out and sell the property. Do you think that's going to help your cash flow? For goodness sakes, yes.
We teach the same thing, my friend, because we've seen the good, the bad, and the ugly, and you got to keep your cash flow positive for operations. Keep food on the table, and you can't just give all your money in monthly payments to lenders. It doesn't work that way. You're gonna put yourself in a bind. Yeah. So yeah, we are all about letting it accrue, because for those who are listening who might be new, accrue means the lender gets all their money at the end, right? So instead of paying their interest monthly, they're going to get all of their principal back, plus all the interest that's owed to them at the end when you sell or refinance the property.
Yes, here's another writer downer, quote unquote, writer downer, quote unquote. When you're buying a property that needs renovation and you're using all private money, here's the quote. If you cannot bring home a big check when you purchase, you're paying too much for the property.
That's it.
If you can't bring home a big check when you're purchasing the property and there's a renovation involved, you're paying too much for the property.
There we go.
Be patient, be diligent, right? Just because you went out there and you got somebody who's interested in doing private lending with you doesn't mean the money needs to be burning a hole in your pocket. You got to go out there and buy a bad deal. No, wait for the right deal. You make your money when you buy, you get paid when you sell or refinance, right? Buy a good deal. It's better to say no. The great Warren Buffett, he says, I say no 100 times a day. Right. That's why his office is in Omaha, Nebraska. He's not even on Wall Street. He doesn't want to hear all the noise. Right. Wait for the right deals. Then you got your lender. It's going to protect the lender. You're going to make a lot of money. People get off the rails when they're chasing these deals. They feel like they got to go out and buy something because I finally got people who want to invest. No, be patient.
Yep. All the deals that we probably lost in the years of doing this, Dave, is when we're hastily trying to fund a deal. Right. There's that
right. Yeah, that's that energy. No, RJ and I know this energy well, and you get it from so it's not just when you're buying and trying to place money and do these loans. It's also with contractors. Like when a contractor's just like, I need money. It's all this rushing around and craziness. It's never been a profitable venture to be in this energy of this weird, fast moving. Everybody's got to chill out. That's the vibe.
Yeah, sometimes. You just need to take a deep breath and take your medicine.
Ladies and gentlemen, the great Jay Conner, get his book free. He's doing us a solid. You can go buy it on Amazon if you want for $20, or he'll just send you a free copy, www.jconner.com/book. Also, he's got his phone number here, and that is 252-808-2927. We are putting a bow on this thing. Mr. Connor, what burning desires? Leave us with some final words of wisdom, sir.
Ask yourself the question, how recently have I done something new that I've never done before? I'll just let that sit.
And that's called getting out of the comfort zone.
Well, as my good friend
is.
who works with me and helps me coach my students, Crystal Baker, her sign off at the end of her email, quote unquote, she says, success begins at the end of your comfort zone.
Yeah, love it.
Love it.
Yes. And by the way, here's another writer downer, quote unquote, success is a horrible teacher. Success is a horrible teacher. So guess what? It's okay to get out there and fail and learn lessons and get better. But for goodness sakes, don't get out there and fail by yourself. Work with somebody like Dave and RJ that can hold your hand and keep you out of the minefields. Don't start in this business the way I did. I started in this business for the first 6 years by only relying on my past experience in mobile homes and reading some books. For goodness sakes, if you're brand new, join hips with somebody that knows what they're doing that you want to do.
I got a writer downer for you.
I'm ready.
Big
I got my pen right
ready?
here.
Listen, you gain knowledge by learning from your mistakes. You gain wisdom by learning from other people's mistakes. That's why you got to pair up. Come on now, bro.
I'm writing this down. Knowledge comes from, you said, your own mistakes, right?
Correct. Wisdom is from learning from your mentor's mistakes. Somebody who has walked this path already. That is true wisdom right there,
Learning
man.
from your mentors and coach. I love it. I love it. Thank you for sharing. My lands, God bless you guys. I'm so grateful and full of joy being with you all here today.
Appreciate you being on. Jay. It's always positive energy, brother. Yeah, I'm here for you. You need anything, you know how to reach me, but we truly appreciate you taking the time for ourselves and our audience. Give our very best to Carol Joy. God bless you, sir. And we will talk to you real soon.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide. And download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.